Hello and welcome back to the Note. We've had a relatively calm day here in the US and in Europe. Both stocks and bonds are well within their recent trends. Perhaps what's most interesting is the continuation of very strong trends indeed surrounding the steady decline of Chinese manufacturing, the end of its big investment boom. If we take a look at this chart, this shows you the Baltic Dry index. It's a measure of how much it costs to transport goods around the world on ships. And it has dropped today to a new all-time low since it was initiated back in the early 1980s. Now that's not surprising if we now take a look at the Qingdao iron ore contract. This is the main benchmark for how much China is spending on iron ore, and you can see that's also now virtually down at a low. Plainly, the steady decline of the Chinese investment-led economy as it tries to move towards more of a services-led economy is having drastic effects. Now those effects are being felt across emerging markets. We've seen the end of the vogue recently for the so-called BRICS, Brazil, Russia, India and China, a concept initiated by Goldman Sachs. Indeed, Goldman itself merged its BRIC fund in with its main emerging markets fund last week. But if we take a look at this next chart, you can see that this compares an ETF tracking the BRICS with an ETF tracking the emerging markets outside the BRICS. You can see that it doesn't really make that much difference. Everything is moving together, some minor exceptions on either side, but everything broadly is following this strong pattern led by China. As China's consumption falls, so the emerging markets sell off with it. Now this raises the very interesting question, as we're actually hitting new historic lows, could the end of this cycle finally be in sight? We're certainly hearing, I'm picking up a lot more chatter that it could be. Once we have got past December and the expected rate rise from the Fed then, which obviously could have an effect on emerging markets, once that is in the rearview mirror, I think you can expect that chatter about a possible bottom in emerging markets to start becoming very loud indeed.